journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, folks, we're going to take a look at the cattle market technically. You can see here, this was the last time we had that 43-day cycle. This one, you can see the number of days up in the move. This is trading days, folks, calendar days. Now, you can see this one hit right on the money, and this is what we're looking at right now. We'll just move that over to where we are right here. We're just about right there again. That was due yesterday, and we're making a slightly higher high so far today. So we're going to be seeing what happens with this. Now, you got to have your stop in, folks, because you look at some of these markets when they fail dramatically. This one, we're basically break even in the cattle. I think we're out less than $100 right now, and our stop is above here at 213 and change. So it's done the right way. I'm bringing this to your attention because the one that is been the leader of the pack, it's now rolling over from June until the August cattle, but we've left a gap up here, folks. You see this? There's your 1.618 number. We hit that perfectly yesterday. This is that same cycle. There's your ABCD move. But here's my theory. Right now we're down on the day just a tad, but if we close in the lower part of the range here today, say any time around here, 216, something like that, anywhere lower than where we are right now, and it closes there, folks, I'd have to be short. And the reason for that is that would leave an island reversal up here. And then you'd be looking at a potential gap down in the capital if that happens, because this has been the leader of the pack, and now it's not leading today. You can see it's down on the day, whereas August is up just a tad. And open interest is rolling over. 2 days in a row, the open interest has dropped. And with prices going higher, open interest dropping, that is a sign of weakness based on the open interest theory. But as we know from the gold market, that doesn't always pan out. So let's move over here and talk a little bit about Treasury bonds. Folks, this market just doesn't have any friends. I've been saying that for quite some time. As you can see, it keeps dropping and dropping and dropping. And we broke through all major support down in here. As we look at the daily, now we're going to be coming in to a pretty significant double bottom here in the Treasury bonds. You can see we're sitting right at the 78% level right now, 212.25. That's the 786 off of this low right here. And so we're going to see if it, starts breaking. It tells you there's your 382 retracement right up here. Okay, and look, it looks like you're going to take this low out, folks. You're looking at some pretty serious moves in interest rates to the downside. That doesn't have any effect of what's going on with stocks, because the emotionalism that's going on with stocks is different than it is for the bonds. That's a big difference in that. All right, now Shane Smolian will be our guest at the break. Also, we're having here is the we talked about this a little while ago, and also in the there was the euro. If you'll remember, this has been bearish for quite some time. I want to get the 4-hour chart up here so you can see where we were. You can see we came down, stopped almost exactly at the 61% retracement here the other day. If you remember that, we brought that to your attention because that's what the U.S. dollar was doing. And now we're having a nice little rally going on right now. And that's what it is, a little rally so far in a bear market. That's really all you're looking at, because there was your pullback right here. Okay, and that was 2 days ago, and now you can see this is having a small little rally just like we've had here. Let's just measure it off of the last high we had right back here, and we'll see what it's going to do as for so far today. That's what it's done. It's rallied right up to the 382 retracement so far. We've seen the same thing in the others, but also we need to look at the dollar yen, because that is the one that they use for risk on, risk off. This is the dollar yen. We'll get this up, and you remember, there it is. We've got there. We talked about it yesterday, and there it is. Let's put this on, refresh. 1 week, and that'll take us there. We did. We hit it yesterday, and then we hit it again. There it is, exactly what we were looking for. 148.44. The high was 148.65. You're now one handle underneath that. So that is a pullback. There was your 382 on the really long run move from way back here. That came in right there. We're a little above it right now, but there is your ABCD, and now it's starting to back off a little bit. So that's what we're watching here in the dollar yen. Okay, now we've covered the euro, we've covered the dollar yen. We need to get talking to the gold market here. Let's just get this up here. What I need to do is I need to put these in so that I can see them all at once. Then when I can bring them up here one at a time here. And the gold, no, where are you? Oh, that's impossible. It is absolutely impossible that I don't have gold on this. I've been watching it all morning. Are you kidding me? Let's try it again. Let's get the gold chart up. And, I know what it was. I had to reboot, and it put me in a different mode. Okay, here's the gold. And we want to get that hourly chart because it looked like we were getting ready to have a little bit of a bounce this morning. Here's where we are. I get this out of the way. Okay, we've been coming down. Really, we haven't rallied much, folks. That's for sure. You can see we've been dropping and dropping. Then we'll get this up here. Okay, now this is the hourly chart. Now all I was looking at this morning here, clean this out so we can see it here. This is an hourly chart. And as you can see now, we've had this 1, 3, 5 pattern forming on the bottom. There's 1, 3, and 5. All right, now the rally yesterday in the gold went right up. Oh, shuck, the front door and raised the rent. Went right up to the 382. This was a 382 also, if you remember. And then yesterday's high was a 382 also. And what it did, it backed off this morning. That's when I sent the video out. I said we made the first 382 retracement, but expect that when this pullback here to see if it was going to hold, because this was yesterday's low. Here we are into the 13th. Now we got higher bottoms in here. This is the first time we've had this. All through here, we didn't have anything like that. And this is the first time over 2 days we're starting to reach it. But we're not even above the 382 yet. So it's certainly not much of a rally. And remember, on the long-term daily on this, we think it can get to this level right here, which is 31.42. All it has to do is take that out, and it'll be there in a matter of probably a few hours or less. So that's what it looks like. There's a good chance that this is the highest high we're going to see for a long time in the gold market, folks. Right now we're setting $250 below the high, okay? And that's where I'm saying that could easily happen. Now, we're going to move on here in just a second because someone's asked a question about the silver market. And actually, silver is the sleeping giant, folks. I don't know. We'll get up here and take a look at it because silver is acting a little better than gold for the first time in a long time. This is the hourly chart. So we're going to switch over to the daily, okay? Because my feeling is, look at it. Now, see where silver is way up here compared to the gold? We're going to cover this when we get back. This is important. I think it's important. So my show, it's important. Take a break.
This year has already been a wild ride for the market. We started off heavily in the red, reversed back to all-time highs, and we now have a trade war looming. Trying to play this chop as an individual trader leads to death by 1,000 cuts. Where does this market go next? Should I add to this position or cut my losses? Where is the next opportunity? Tariffs, trade wars, analysis paralysis. Don't become a victim of this intense market. Instead, join Larry Pesavento over the second and fourth Friday of every month for 3 hours of live trading. Larry has been through many markets just like this one, and the insight he provides is invaluable. The dates for this month are April 11th and 25th, 9 a.m. to noon Eastern Time. Get in here and let's start trading. TFNN, educating investors.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Okay, folks, this is a silver chart. On the day we had the tariff thing starting back on April the 2nd, you'll notice here that we dropped from 35,000 down to 27,000, folks. That's a huge move in silver, as you can see here. That's 8,000. So that's a $40,000 move. You can see the first day was about 15,000, and then the second day and third day was down about another 30,000. That took out all those lows, and not only that, it put the silver gold ratio. Right now, we're back above under 100 to 1. It got over 100 to 1. So in order to be 100 to 1, this has got to be at 32.50. And now you can see it's changed. Now, after we had that bottom, and this was the next day, you can see the pullback right here, on that day right here. I happened to be watching that because I was in Europe at the time, and we were making a perfect 382 retracement here the next day. You see how it took out that previous low, and then away that it went. It's been acting a little better ever since that time. My assumption is that if we ever get above this level right here, which is 36, I think we're going to take out these highs, which would be above 50. We've hit $50 an ounce several times. 1980, it got to 54. 1911, it got to 51. And if we get above that, it could go a great deal higher. So I hope that helps you looking at the silver market. We'll move this out of the way because we're done talking with that. And gold, we finished that. Now, the next one we want to talk about here is the NASDAQ, because it's still going up. And as you can see here, I'll just draw this in here. We're setting at the ABCD pattern here. The NASDAQ, just as we speak, there's the ABCD off of this larger one. There it measures to 21,307. And so far the high has been 21,338. So that has completed. The $64 question is that going to be it? That's much we really don't know. The Dow Jones has been the weaker. Now, if we take a look at the Russell, which has still been, very strong, it's still going higher. Let's get it up. It's still, lagging a little bit behind the NASDAQ and the S&P. So here's the Russell, and you can see here, we haven't taken out yesterday's highs as of yet, but we're not very far away. Let's get the daily up so everybody can see it in the same text that I'm trying to show it. There was the ABCD, and you can see we went way above that. And not only, is that a gap? I guess it is. Let's just refresh 1 month. No. Yeah, there is a gap. It actually left a gap. Son of a gun. Well, if it left a gap, that means you got to add that 1.27 to that. So let's just check and see if that is in fact the case. And we'll get that up here. And you'll see that, well, that takes you to 21.45. And a high yesterday was 21.39, so we could easily get to that. Better put that limit minder on just to keep myself reminding ourselves that that might be it. My assumption is, folks, what we're looking at here is a big ABCD in a very, very bearish market. I mean, you saw what we did down here back on April the 7th when the tariffs were supposed to be coming in, and now all those games have been changed, and we'll have to wait and see what's going to happen with it with the rest of the time. So let's move on here, and I want to talk just a tiny bit about the crude oil market because several people have asked why the crude is so strong. Folks, last week we were talking about this on the long-term wells several days ago. There you can see, well, you can see last week, there was the big ABCD coming down right in here at this 58 level. We went a little bit below it, but now we've had a pretty good rally back. Let me refresh this daily chart, and you'll see there was our low right in here. It was measured to 58. It went to 55, so it went three bucks under it. And let's just look at it like we would anything else, okay? This is what I try to do when I'm analyzing a chart. Get this up. First thing I want to do is I see the ABCD coming in. There it is right here. There's your ABCD. Now you got it. You can't take this anymore because you had a new high, so you had to put that in there. That tells you you're coming into 57.37. Well, coming down this strong, you're probably going to extend a little bit. Then we had the other one that was right here. This was the one, if you remember, we were shorting into that 382 up into here, and that measured exactly to the low, 56.17. And now we've had a really strong rally these last few days. And that's what we've been trying to say. If you looked at that smaller time frame, this thing's been going up. I mean, look at this thing. It's really had a heck of a run. There's where we were last week, and then coming in to this, there was where we were, the pullback right in here, very, very minor pullback, not even, I don't even think it was a 382. This was into last Thursday, and you'll see, see, it didn't even quite make a 382. I'm not sure this one did, but you can see where we are now. We're banking against this 1.618 number right now as we speak. But let's measure from the low up here. And there was your 382, never even missed that one also. Here's where we are right now at 3386. That's been the high. Look how long we've been here, folks. It's been here for well over an hour, sitting right up at that 1.618 number. So that may mean something, but look how it's been there for an hour. Let's look at this on the 4-hour chart. Maybe it'll give us an idea of why it's called. Oh, I see why, because you're banging against all this stuff in here. This is very clear from my opinion, and of course, move that over. You'll see it tells us we're probably going to go a lot higher, and that's going to be up here about 66. So I don't think this is going to hold anything back at all, this short-term pattern that we're looking at right here. This is where we're most probably getting ready to go, and that would be the high off this April high, and we'll measure it from because that was a big high at 72.80, and that will also bring it. There it is. There's your 61% retracement. Everything that would be a Gartley pattern, that would be that would definitely be a sell signal, because there's your ABCD coming in right there at 66. Looks like 66 even. It looks like, 66 even. Round number up another $2.25 from where we are right now. So that's what we're watching. Now let's take a look at gasoline, because it's been really moving. Evidently people are driving a lot so far this summer, and summer's not here yet, not for the spring anyway. Here is the let's just do this one right here. This is gasoline, and you can see it has been really moving fast. And just the last few days, there hasn't been anything even related to a 382 retracement on any of these. I haven't checked yet this morning, but yesterday there was nothing yet. I mean, it's just been straight up the whole way, and that's telling you it's got some really powerful things moving in here. Okay? All right. Now, we'll try to have tomorrow, we're going to try to have our good friend Mike Moore on as our guest, and Shane Smolian will be our guest today, coming up in the heartbeat of a few minutes here, and he's always got some great timing stuff with the things he's looking at. Now let me get rid of this, and let me make sure I can double check what we're doing here and make the windows so I haven't missed anything. Then we'll have Shane on here in just a second, and we'll go from that level right now. Let me see where we are. Okay, cattle are back into a profitable thing, and that's basically what we're watching here, folks. Keep your stops working in all the things that we're in right now. We got a $400 profit in the wheat, and that's it. Let's take a break, and we're going to have Shane Smolian on next, folks. So stay with us, please do, please do.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors. This portion of Trade What You See is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Okay, we're back, folks, with Wolf Trader himself, Shane Smolian. How are you, my friend?
Larry, long time no speak. Or a long time
I
no
know,
show.
I know.
We speak all the time.
Well,
but
you're
not,
just a busy camper. Got to
I,
squeeze into your calendar to get on. Hey, listen, tell us what we're looking at, folks. You got some really good insight on this. So, tell us what you're watching, Shane.
Sure. So let's start with the S&P. So I'm going to give an S&P overview here, and I have a picture here with a money printing machine because, of course, we always know the Fed is front and center. We're waiting for this Fed policy to change, but we'll get into that in a little bit. But before we get started into the Fed juice and all the typical indicators that I look at, I do want to look at some other indicators. Fear and greed index. I think this is notable. This is just something to note. This is not a trading system, but it has moved finally up into greed. And this was very, very stubborn down into extreme fear for a long, long time. So this is the first time we're actually seeing this get up here near greed or extreme greed in a long time. I think there's a lot of euphoria, a lot of relief with the China pause and the tariffs. And so this is kind of setting up now the backdrop. If we do get a turn in this market, it could be a more substantial one, but we haven't got that turn yet. We'll get into that. Volatility, I have the volatility here, and we look at both the Fed juice and the quad lunar cycle. The Fed juice is still in a sell in the volatility, so that's still a very bullish sign for this market. Now, we also look at the S&P intraday. I do have this intraday chart here of note. You can see these lines here. These are Fibonacci fans. These are actually, instead of support and resistance levels, these are speed lines. And the market is coming up and starting to touch the bottom of the 61% speed line here. So we will see if it can keep going from there. Now, this rally has been pretty fast off the lows. We've had a lot of these rallies, and I call these rallies the JJ rallies. I wrote a whole article series about these. I call that the just joking rallies, when they come out and they make the tariff and they come out and say, well, we're just joking. It's a pause for 90 days. We're just joking. It's going to be this. We're just joking. I'm not going to fire the Fed. So we have these, I call these the JJ rallies, these unexpected rallies where
I like it.
Yeah. So the most recent JJ rally was this one with the China, we're just pausing it for 90 days type of a thing. It's done a lot of work just to get back to where it was, Larry. I mean, this is crazy. Like, everyone's celebrating this. We're not even back at the highs yet. So it's kind of interesting, the psychology of this. Now, I do point this out too. Again, this is not a trading system. Gaps are not a trading system, but there are some gaps that the S&P has left here at 5720.1 and 5309.6. I do think that's going to go back and fill at some point. So I do think there's a good chance that before this market really starts to take off, it's got to go back and fill those at some point. So again, that's not a trading system, because a lot of people get sucked into the gaps and they get lured into it. But I do want to just point that out. Now, I'm going to actually show you guys the full month forecast, because we're already halfway through the month, just to kind of give you an idea of what we do here. Now, there are many different systems that people look at. So, for example, this is a calendar that I have, but I actually take 4 of my strongest cycles and transits and put them together. So I have the solar cycle, the planetary speed index, the quad lunar cycle, and the general combined transits, which is kind of similar to a Bradley. And then I put all them together and I make one graph. So I've been doing a series on forecasting each Saturday. We're going to be on part 3 this week. But the point is that you can't really just stick to one of these, because you got to be real careful about that when you're talking about these forecast models. So, because they each have their own limitations and strengths. So what I do is I put them together and I make a graph, and that's called the Cat Master Composite. This is a composite of all the cycles on the Astro that I do, and I do this each month for the subscribers. And so Cat stands for cycles and transits. So I combine different cycles, different transits, planetary speed index. We come up with a graph. And this month, the S&P is very, very strong. You can see here that we're coming into this plateau, and it's making a big run up until the end of the month here, until May 22nd to the 23rd. So we were talking about this strength for a while. This is the first month that we're actually seeing a lot of this stuff line up very nicely here to the upside. So it wasn't too surprising to see that push up. Now, this is not enough to do a forecast. You have to really watch what the Fed juice is doing. In fact, the Fed juice is the decision maker. We're going to follow the Fed juice, but this is very strong supporting evidence that there should be strength in this market. So I always combine 4 different cycles and transits together to get what I call the CAT master composite. And this is really, I think, one of the strongest months in terms of agreement that we've seen in quite a while. So that's pointing to strength. Now, I also have these super biorhythms that I do, and we've really been refining these. These are similar to cycles, but I build them a little bit different than cycles. They're interpreted different than cycles. I don't do any of the composite cycle. People like to put cycles together and make these composite waves. I think that is a big mistake because you lose the precision of when these things turn. Now, this guy, I have a black and a blue one here, and you for the most part, you can kind of think of these like cycles. I do interpret them a little different, but you can see here that the blue one is the medium term and the black one's the long term. Now, long term, we're still into this kind of this bearish backdrop here until the beginning of July. But short term, you can see in this medium term, this did turn up on 5-2. So you can see here, this hits the low, and this should be pushing up now. So that wasn't a surprise that we saw the S&P make this push up here right after we got that in alignment there. So that kind of was in alignment with the CAT master. It was in alignment with this, and then the Fed juice has been in a buy. So, to me, this was, we could see this one coming. It's not always that clear. Sometimes you have choppiness and there's confusion, but this one was pretty clear. But longer term, I still think we have to get past this July period into here first before we can really say that this market has the green light to go. But overall, it is encouraging to see that the tariff tensions are coming down a little bit. So, I mean, that has been just real chaos for us. I mean, just the day-to-day joking, just joking, tariff, no tariff, firepower, not firepower. The whole thing has been very jarring on markets. And so sometimes it's tough. And sometimes if you take a look back at this, you can actually see this. I also have the U.S. dollar on my super biorhythms here. So the black one is the long term. And this shows us actually coming into a low on it already came into the low here, and we should start to be pushing higher here on the dollar. This was back into early May, and so generally, if tariffs are working, you're not getting into crazy tariff wars. The currency should strengthen. It should. But we've had this crisis confidence where investors have been fleeing and all this chaos. But I do think that this is showing that we're going to start to see a push up here in the dollar coming up. So that's one thing. We also look at different forecast modes. I'm just going to show you just some of these. This is these are the transits. You can see this is one of the graphs that I used to build that CAT master. You can see that it is pushing up here into this May 21st through the 25th period into here. Another fan favorite that we have is the Plant
Got to pay a few bills.
Sure.
We got to pay a few bills, my friend. Stay with us with Shane Smolian, wolftrader.com. We'll be right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento, a pros pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the fund involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foresight Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
We're back, folks. Speaking with Shane Smolian, the Wolf Trader. Please continue, my friend.
Sure. All right, so we talked about that Cat Master Graph. This is one of the components of it, too. This is called a Planetary Speed Index. This has been very good at modeling the market. And in emotional times, the speed of the planets tends to model the markets. And so this makes this low on 318. It hits it on 49. This is very close to the market low. That was the big area that you had been short in, Larry, correct? That was the big dip there that we had before the tariff reversal. And then 427, and it is coming to a peak here in 526. So we do have a nice convergence here of Astro. That doesn't mean necessarily that's what will happen. We have to get the Fed use in alignment. We also have the Bradley. We look at the Bradley is making a low here on the third today, pushing up again till the 26th. So we have many things here, and then this pushes down to the 612 that suggests that May will be strong. So this in particular this month just has a lot of cycle and transit evidence behind it, but that's not the real stuff. Let's talk about the real stuff here, Larry. That was like the previews to the movie, right? You go to the movie and you see the upcoming. That's what I just showed you. We're going to talk about the real stuff here. The real stuff here, I'm going to start with a chart here that I look at, which is not breadth. It's not necessarily dealing with sentiment. It's the 1 month new lows and new highs. This has been extremely powerful at forecasting lows. And so it's kind of a sentiment indicator, but it's very specific. You can see here in red that when we hit this low here, that the new number of lows for the month hit a spike. And when it gets past this red line here, that's usually some type of a low. And we were alerting our subscribers of this. We said this hits this low. Now, on the flip side, you can see the highs into here. This is the black line. When this gets above this dash line here, it does tend to mark highs. So we have met a condition now for a reversal on the market. This is not a trading system. This is just background information, but it has met the condition that it's met in these previous levels for a reversal. So in terms of sentiment, in terms of people feeling good, in terms of people feeling like everything's okay, we've kind of checked those boxes off. Now let's talk about the real stuff here, which is the Fed internals. This is really what's driving these markets. And so this is why we focus on the Fed so much, because if you can't understand what the Fed is doing behind the scenes, we track this data every day, you really can't understand why the market's behaving the way it is. You can see here that the Fed has been in this deep tightening cycle here. And this started right when Trump came into office. So, everyone talks about the tariffs as driving the markets lower. And yes, it did. I mean, there was shock value. There was fear. We didn't know. But the markets were going to go down regardless. As long as these Fed internals are falling like this, the market has no chance. And again, we can go back and study this. I've done webinars on this. We go back. I've looked at every situation since 2009 with these indicators, and there's really no exceptions. Now, you can see here it's flattening out a little bit. It's not really bullish. It's flattening out, but that is kind of a neutral stance right now. It had been falling. So these markets didn't have a chance. Tariff or no tariff, it didn't have a chance to go up while the Fed was doing it. It's just the tariffs made it much more dramatic and dire. So this is the big chart that we look at each day that really helps us understand where this market is going. And so I'm going to zoom in here and just kind of show you. I have different arrows here, but really the one you want to focus on here is the red one here. This is the Fed juice. This is our system that looks at what is the market doing versus the Fed. It's a neural network. This is an actual trading system. So when we talked about the Bradley and cycles and different things, that's great. But this is the decision maker. You really need to have the Fed juice going with you for this market to move, and to move to the upside or to the downside. So the fact that this has really been in this strong buy pattern here, along with the Astro, really tells the story, I think, of what's been going on here. We do have background information here. We have the quad lunar cycle here in blue and the planetary speed index in black. But essentially, we need to zero in on the decision maker because, again, we have a lot of evidence. We weigh the evidence back and forth. But at the end of the day, we have to be able to make a decision. What are we looking for here? We're looking for what the Fed juice is doing. It's still in a buy. And you can zoom in here on this chart, and you can actually see that it's really showing no signs of weakening into here. In fact, it's just continuing to get stronger into here. And so even though we've met some criteria in terms of the new highs, in terms of the sentiment, until this turns lower, the market will most likely continue on its path up. And so this is why I tell people it really, in this day and age, I mean, pre-2009, you could probably throw Bradley and cycles out there, but in this day and age, we really have to pay attention to what the Fed is doing. And we've done our best to integrate this into our trading system here. So I have some different months lined up here. I know this may be hard for the viewers to see, but it's really kind of a rainbow pattern. I'm just looking at how have the months done in recent years, going back to 2012. And right now we are in the month of May, which is about 71%, and next month is strong. But take a look as we get out into August, it drops to 46. Now, if we take Trump at his word that we're going to do this 90-day pause, that would put the market, that would June, July, August, that would put us out into August, and that kind of makes sense that's when these tariffs would come due, and we get more of these tariff negotiations going on. So probably out into August, September here, that's statistically when the market looks good. However, I will point this out. I do different forecasting models, but they all have their limitations. And when you're doing things in cycles, a cycle analyst will tell you everything you need to know about the future is dependent upon what happened in the past. And it can be very useful, but there are limitations to that because we do know that that's not true. We do know that, especially with the tariffs and all of this new information coming into the markets, there's new information coming in that can disrupt these markets and cause them to go in different directions. So that's why we try to focus on also what the Fed is doing. Geomagnetic activity, like we have been tracking this, it hasn't been really doing too much. We are coming into a quiet period here in the summer, which is generally bullish for the market. So that's the S&P there, still generally bullish right now. We're still waiting on the Fed juice to make a turn lower. So right now it's up until the Fed juice tells us something otherwise. I do have some Bitcoin info if you're interested in that, if you want to talk about that.
Absolutely. Gotta have that.
Okay, so Bitcoin. I also have super biorhythms for Bitcoin. We're starting to bring these in now to all of the symbols. So this is our baseline forecasting model. And you can see here we have been talking about this rise in Bitcoin for quite a while here. I mean, I talked about that at April low into there for like 6 months. And these super biorhythms do a very good job. By the way, Bitcoin, if you want to pick a symbol that responds the best to the super biorhythms, it responds the best to the Fed juice, it responds the best to the quad lunar, it's Bitcoin. Bitcoin is a fantastic symbol in terms of following these. And this is telling us that Bitcoin will likely continue to push up here into this June, July period. And so that's a good sign for the S&P too. I think if Bitcoin can stay strong, I think the S&P they tend to correlate pretty closely here. I have a graph showing the S&P along with Bitcoin, and you can see here that Bitcoin got stronger quicker than the S&P, but they do correlate. I have the correlation down here, the correlation coefficient, but they do tend to correlate, especially when we get a risk-on type of a trade on these markets. I do think Bitcoin has a chance here. You can see here, this is the chart that we look at, and with the Fed juice and also the quad lunar cycle. Both of these have been just absolutely beautiful in terms of forecasting these movements in Bitcoin. The quad lunar cycle did go into a sell on 5.8, but the Fed juice is still pushing higher.
Stay with us. We got more to come. Stay with us, Shane. Another 2 minutes, and we'll 3 minutes. We'll be back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pros pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
TFNN has launched The Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
We're back, folks, with Shane Smollian, WolfTrader.com. Please continue, my friend.
Sure. So I just wanted to give a quick summary of the interest rate cycle here. I know we're shifting gears from Bitcoin, but this is very interesting. This is a cycle that's showing the interest rate or 10-year interest rate, and it was supposed to come and make a low here in late 2024, 2025, and early 25, and then it's supposed to pause until 2026 and then push down again into this 2028 period. So it kind of goes along with the Fed right now holding rate. They're really not cutting. They're just kind of in this pause period, and this does suggest that we will start to see interest rates fall for the next 2.5 years after this current year is up. I do want to put another super biorhythm for your viewers here for oil. I had put this in April. I talked about this. This does show oil going up. I do think oil will get strong. I know I heard you talking about oil, Larry, on the show today. I do think oil will continue to get strong here into 724. And the problem with tariffs is that you have to weigh, the prices may go up domestically, but then the global demand may fall if it creates recessionary type waves. But I think overall that as we get these trade deals, that's going to be good for oil. I think oil has a chance to be going up here. And again, this is pushing up here into the very end of July. So I'm getting all of these put together like the pieces of the puzzle for all the symbols, but I just wanted to share that with the viewers. I do think oil has a shot here, and the more news we see, I think the more good news we see from the tariff talks, I think the better that will be for oil going forward, and probably the worse for gold. So
okay, so you think gold's got more to go to the downside?
Oh, well, I think gold could go up a little bit more. I don't have that chart. I should have brought that one here, the biorhythm on that one. But
just rough idea. Yeah.
I think gold will go up. Hold on, I'm looking at it right now. I got it up until about like July 16th, somewhere into there. Like I think it's still got another push up. But
hey, thanks for joining us, buddy. His
Thanks,
contact
Larry.
information is posted. Thank you. Shane Smolian, folks. See you tomorrow. May God bless.